How are we all doing? How is everybody this fine Thursday morning? Morning, Steve, Baggy, Evil, JC, Paul, Russ Weaver, Danny, Rabbit, Whole TV. Morning, Virginia. Ming, like the waiting music? Only some stock thing. It's not exciting. Morning, it's time. Gregors, I'm in Leeds. Ming, good for you. I knew someone from Leeds once. Morning, Antonius, Callum, Liso, never say your name. Ismet, how we doing? So, wet hair day today. Yeah, just got back from spinning at the gym. So, always a rush on a Thursday. Always good to get your exercise out in the morning. Anyway, excuse me. Right. So, this morning we have had the unemployment rate for Australia. Came out at a 4.1 on a forecast of a 3.9. So that is negative Aussie. Wrong button. Where's my pen? So negative Australian. So the unemployment change was up, but unemployment change isn't a particularly good indicator of fundamentals for unemployment, because obviously new businesses start, computers replace people, that sort of thing. So the amount of people in unemployment is more of a variable. It's more about what you have to pay everybody that is unemployed, which is what the unemployment rate gives an indication of. So that's gone up. So Australian dollar down. As you can see, it's not a massive move on the Aussie. So there's your news that went in on the Aussie CAD, for example, this morning. So we had a big push down. It did pull back into the propulsion gap. They resold that. We got a break of structure. So market reverse alert's gone in. So bears have taken control on the news, but not dramatic. So as you can see from the ADR dash, nothing's hit ADR really, apart from the Aussie dollar yen. So nothing particularly exciting from this morning's unemployment rate. But yeah, I mean, it's not really going to do a lot, because at the moment there is absolutely no indication as to what they're going to do with their interest rates at all. So these numbers, basically, we don't know if they're even watching these numbers at the moment. Excuse me, got a frog in my throat this morning, because it's all about inflation. So we'll see what happens, but there's not a massive amount of movement. Why is that all the way up there? So we'll have a look through all the pairs this morning. Only ADR we've got today is Aussie dollar yen. So that just tapped ADR and bounced off, and it's rallying back up again at the moment. But that is a nice M pattern reversal going in at the moment. So pull back up into there and a drop potentially. All the yen pairs yesterday had a nice turn. So we had this massive kind of grind all the way back to the second intervention, which is where I said there's a good chance we might get some movement, and it happened. So we did have a lovely sell-off yesterday, and obviously it's continued so far this morning. So that market structure, although it's very odd in shape, is still holding bearish. So if we break that low, I think there's a good chance we'll get a multi-week stroke multi-month move with the yen down. But we'll wait and see. A lot of this movement yesterday, however, was caused by the US dollar news. So the CPI number coming out as expected, and ever such a slight drop on the monthly number, which obviously powered up the yen a little. When the US dollar tends to weaken, the yen tends to strengthen. So as you can see by Euro US, we had a big strong push up yesterday. So we're looking for a pullback on that today. But yeah, apart from that, not a lot else really to look at today from an ADR perspective. There's lots of weeklies. We are only on Thursday. So if you go through the weekly RSI extensions, ADR or AWR extensions, There's quite a lot of opportunities on weekly ranges being stretched already. Aussie CAD there, Aussie US extended, but the move actually went in this morning on the news, so you'd have had to jump in it early today on those. The Euro New Zealand extended to the downside, as you can see. Reverse alerts just going on that one, so that one's starting to play out as well. Euro US, same thing, it's all starting to reverse. So all these weekly extensions at the moment looking like they are starting to play out this morning, but we'll see what happens during London. New Zealand dollar CAD is more extended as well. So this one, I've had to do 2 drawdown controls on this one. Did one yesterday and I've done another one this morning already because it's getting stretched. So first entry was obviously there, second entry there. We had a week, over a week of accumulation on this and went absolutely nowhere. And obviously yesterday, the US dollar dropped, so obviously the CAD dropped with it, which took it all the way up there. But my average is within ADR, so if we just get a pullback into support, that'd be a nice little TP. In fact, I need to move my TPs on that. So TP, I'm going to put 150 ADR to the downside. I remember which of those I had in place. So there. New Zealand dollar Swiss also extended. That's already played out. New Zealand US starting to play out, and US dollar yen, as we know, started to play out. Well, actually, that is the opposite move, but I wouldn't want to really long that. I'd be much more interested in short. But I'm not interested in it at all at the moment because I have no idea what the hell the yen is up to. Morning, Harold. Morning, Monkey. Morning, Franco. So we'll flick through all the pairs today. We'll have a look at everything. There's quite a few RSI extensions going on at the moment on the 4 hours. We've got 3 noticeable, really big extensions above the 80 levels. So what I'll do is I'll just whiz through all the pairs rather than look at them individually, but they are the main ones. Euro US, yeah, big extension above the 80 level. We got New Zealand dollar CAD, big extension, but I'm already in these anyway. And New Zealand US, yeah, so I'm in all 3 of these positions anyway from previous H1M5 entries. So nothing really for me to get into there. And pound US dollar as well. So these two, basically, Euro US and pound US, move very, very similarly. And obviously these New Zealand US and New Zealand CAD move very similarly because the US and the CAD move together along with the New Zealand, and the pound and the euro move together along with the US. So very similar entries, very similar trades. Right, overnight news, not an awful lot. So the Japan GDP numbers came out this morning. Nothing particularly exciting at all there. Lots of information about GDP, but GDP really isn't any effect on interest rates, which is what's driving the market at the moment. So don't need to worry about any of that. There's your unemployment claims and unemployment rate for the Aussie. There's a bit more news came out from some of the Japanese diplomats. No mention specifically about intervention of any kind, just warning about Forex risks leading to price increases, etc. But we had that big drop yesterday, so I'm not surprised that there isn't any mention of intervention because I think they were probably waiting to see what happened when we pulled back to the second intervention move, and obviously it has kicked off. But that's, as I said, mainly because of the US. So we need to see what that US dollar does because that could reverse that yen move as well. But apart from that, nothing else overnight. Putin talking again about stuff, threatening everybody, as usual. A load of blue crap by whoever is that person. So yeah, that's it. Nothing particularly exciting. So we'll whiz through all of the pairs basically. See if there's any good support resistance opportunities if you want to take any support resistance bounces. But there's plenty of RSI extensions at the moment going on to get into trades on. And obviously today is well, we've got unemployment claims later, which probably won't do much at all. But today pretty much is a no news day, apart from the unemployment claims. And obviously this, it comes out regularly, so it isn't something that has a massive impact. It's got to be a very, very big deviation to have any impact long term on the market. But we might well get a big spike off of it. We'll see what happens. But after yesterday's move, I doubt that will be used for anything other than undoing the move, because that move yesterday was substantial. We had 175 ADRs on some of the instruments, and it was an as expected result. Yeah, so the core CPI was 0.3. The year on year was 3.4, both as forecast. There's absolutely no reason for a 175 ADR move on stuff. So, yes, it was an ever so slight miss on the monthly, but we don't pay attention to monthly. We pay attention to quarterly and annual figures. So that is an indication that it is possibly starting to turn in the right direction ever so slightly last month, which has got nothing to do with what this month's figures are going to be. So big overreaction by the market. So I wouldn't be surprised if we see a return to origin move on a lot of that stuff that happened yesterday. So good mean reversion opportunities everywhere. So that might be used as a catalyst this afternoon to move the market. We'll have to watch and see. And then tomorrow, there's nothing. So it's dead completely tomorrow. So I've decided to come on at 2:30 tomorrow afternoon and just trade the open in New York, because there's nothing else going on. But that doesn't mean there's not going to be movement. So but there's no real news to worry about today. So we'll see what happens in London. As you can see, we've got some massive moves happening. So as always with these large moves, there is a strong probability of at least a 50% retracement or a V-shaped recovery on the move. Obviously, that's over a week, but often we see these moves intraday. It's just accumulations everywhere. It's so hard to find actually any movement. Proper movement. There's one down there. So that's sort of, I mean, that's an intraday move. But after a big, strong news event, yeah, 50% retracement back into propulsion, very, very common. Often complete V-shaped recoveries on the actual events. So what we've got at the moment, we'll have to see what happens during London, but there is a strong probability of at least a return back into these areas here, or a complete A-shaped recovery, in this case, back into propulsion. Yeah, so we'll see what happens. Obviously, we've got a bearish Australian dollar as well. So Aussie dollar CAD, broken out the highs. So there's one of two things going on when you get a breakout. It's either an accumulation break where they are doing price discovery to see if they can hold price at the higher levels. If that fails, which they do the majority of the time, we return to the origin of the move. We sit back in the accumulation and try a price discovery move to the downside. And then that either works or it fails. And if it fails, all you're doing is you're getting a range, which turns into range expansion. Yeah. So, or it could be a continuation move. That's what we get in a moment, isn't it? News and accumulation. So we could well just sit up here now for another week. Who knows? But nice extension on the hourly. I've got two positions on this one at the moment. It's in profit at the minute, but I'm not getting out there. We've got the 4 hour very nicely extended above the 70 level. You can see the market structure very clear moment. So should be able to get a lot more of a pullback on this leg, a lot more, at least into here, if not back into these levels down here. So plenty of room on the downside on this one. Just move the TPs down. I'm going to go for the latter today, see if we can get a 125 ADR move. I don't think we will, but over the next couple of days. Morning, Amy. Morning, Kennelly. Aussie dollar Swiss. Return to origin on yesterday's move. So there's your news spike. On the US news, we're straight back down into that area. A bit of a strong Swiss franc overnight. A little bit of strength in the Swiss franc, and obviously that weakness in the Aussie. So propulsion gap test is done. So they filled the propulsion move. sellers re-adding to the positions there, but we got quite a bit of fight back this morning. So we'll see where this one goes. This is going to be driven by the Swiss franc this morning, obviously, because it's the European session. So market structure is very clear on it. Potentially, we're going to continue in a bull run. However, we've had a big, strong push down on that news, so this may well just return back to origin. Again, same thing. Yeah. We've been ranging on this now for 2 weeks. A bit more than 2 weeks. Yeah. We had a little bit of a push up. Little bit of a push up. Not going anywhere. So that yesterday, if you took that one short, I'm not trading the Swiss at the moment because I'm still unsure what the Swiss is going to do. I want to see what the next rate announcement is for the Swiss. I want to see if they're going to move into a continued interest rate drop because they shocked the market as usual by not announcing the interest rate drop last time, which makes it incredibly volatile and possibly very squeezy. So I'm just steering clear for the moment until I know what's going on with that. But as you can see, it's just not doing anything at the moment. But you had an entry there. There was one entry back there 2 weeks ago. That's it. This thing has gone nowhere. Flatline. So if you'd have got into that short there, you'd have scaled in and out. If you're getting in yesterday, you're sitting in profit. So any extensions you are getting on it are working, but don't expect to make much money. Doing nothing, is it? Aussie dollar yen, we're back up inside the first intervention. So we've had a reversal alert yesterday and a retest and a new leg down. So market structure has shifted short. So good opportunity for continuation shorts on this. Again, don't know what's going on with this yen at all. But any RSI extensions to the upside would be preferable. But the swaps on this thing, if it doesn't do anything, just be aware if it does that and you're holding it for 3 weeks, it's going to cost a fortune. When I held this position for 6 weeks last time, daily. 1, 2, 3. About 7 weeks. The swap cost was just over 20% of my loss. Yeah. So of the loss that I took, 20% of that was swap fees. So holding anything short against the yen at the moment is incredibly expensive if it doesn't move. So if you get into a situation where you get in, and you can't get out, you're going to just eat your account. So it's very difficult. I cannot take a bias long on it because of the intervention. We've never had an intervention move like this that doesn't cause that. So we've never had interest rates rising in Japan. So again, we don't know what's going to happen, but I can't go long on it just because of the intervention and the threat of intervention again, which would do that. And I can't go short on it because the thing's just not giving any real indication. So I'm just sticking clear at the moment. But if you do want to take it short, it's definitely reversed. So we've got a structure break. If you look at the 4 hour, we've got a very nice M pattern multi-day there and a propulsion gap, which would be fantastic sell opportunity. But is it going to just get stuck? We don't know. So kind of steer clear of the yens. They're all in the same boat at the moment. So I'll go through all the yens at once. CAD yen, same thing. So we've pulled up, completed first intervention. There's the gap fill yesterday. The day before, and then we've had the reversal, and that's just basically collapsed. But that's because of the US dollar move yesterday down. So that will probably reverse up again. Swiss back up to intervention, move back down. So this is the area that I was watching. If you remember, I said on Monday, that's the area I was watching for the drops on all of these, you have to ask the question, if that news hadn't have come out ever so slightly negative for the US yesterday, would that have still happened? Was that actually a yen move, or was it just a knee-jerk reaction to the US? So I'm still not convinced that that isn't going to turn into a V-shaped recovery, but we'll see. All of these yens. Euro done the first intervention, back up into first, again dropping. So it's a hell of a long way to go down to there. But as always with these types of moves, it climbs up the stairs and it tends to fall down the elephant shaft, fall down the elevator shaft. So you quite often will undo an entire week or two's worth of moves in 1 or 2 days. You get ADR hit, done. It's basically a profit take, knee-jerk reaction profit take. The market has been grinding away, watching its P&L get higher and higher and higher and higher and higher and higher. And for the first time, your P&L drops. So you panic sell some of it, which causes everyone else to panic sell. And then the panic sell starts. And that's why you get the elevator shaft moves, because there's too much money on the table. Think about your P&L, seeing your P&L going 200, 400, 600, 800, 1,000, 1,500, 1,000. It's like, holy crap, 50% of my, or 30% of my profit has vanished. I better get out of some of that. And as you do that, you become a seller. You cause more sellers to enter the market because they see selling, and it just accelerates. That's why we have to climb the stairs down the shaft sort of scenario. So that could well happen. We could be back down here by the end of tomorrow, you know. But equally, we still have no indication from the Japanese what they're doing with their interest rates. So we don't know how they're going to control this currency moving forward. So it's just a bit too risky to try and hold short at the moment, in my opinion, only because of swaps. If the swaps weren't a factor, I'd be shorting it. But from, you know, if you got in, let's say you got in there and thought, yeah, there's the retracement, I'm going for the next leg down. So if you got in there or there, you've been sitting in this for 1, 2, 3, 4, 5, 6, 7, 8, 9 days. So you've paid 2 treble swaps and swaps every day. That will be sort of 5, maybe 10% of the loss drawdown that you're in will be made up of swap again. And it's only a week's worth of movement. So it's just too expensive. So we're back up in almost completed the first intervention move on the New Zealand dollar yen. This has been the strongest pullback of the lot. So M pattern reversal's gone in. We didn't manage to break that low. If we do break that low today, there's a good chance, as I said, we'll start to get that move kicking off. So watch these lows today. So you look at yesterday's low on New Zealand dollar yen. Here, you can't quite see it as the dotted line is there. Yeah. So this morning, we basically came down in the Asian session, hit that. They bought it back up again. So limit orders triggering off of yesterday's low, which is not unusual. Since then, we've got loads of wicks to the downside. Yeah. So we know that they are continuously buying this level, which is what slightly worries me about this not being a Japanese move. It's just a knee-jerk reaction. If it breaks that low, however, everybody that has sold this propulsion gap is adding to this position, and everybody that is longing this will just flip short at that level and again drive price back down again. So looks good for shorts. But you know, just literally, you've had the reversal alert. This would be the retest, so you could enter on the retest, be a bit higher up. But an order just on the break of that low, I would use a stop loss order on this above whatever this pullback high is. There's a good chance that that might turn into a multi-ADR run. So potential there. And US dollar yen, obviously. So this dropped catastrophically yesterday and today. So there's certainly yen strength coming through this morning, but it's undoing that at the moment. So how far that's going to pull back, very difficult. So if you do want to get in short on this one, you've got 2 things that are dangerous. One, is this intervention failing? And is this just a pullback on the next leg up? So if that is the case, this is your entry long, which is a decent entry. And if you go long, you're not going to get swaps. You're going to get positive swaps, which is fantastic. They pay us to hold the position, which is great. It's a carry trade. if that intervention is working, this is a pullback, and all you're going to get is a pullback on that leg before you drop. Yeah, and if it breaks that low, we could be into that multi-week run. So it's a very, very, very tricky thing to trade at the moment, the yen. Too much happening that we do not understand, have never had in the last 2 decades since I've been trading. We've never had positive interest rates on the yen. We've never had intervention moves of this level, and we've never hit 160. There's too many variables that are unknown. It's a flip of a coin. It's either yen are stuck in a death spiral and they can't get out of it, in which case you want to buy it, or the intervention is going to work and the US dollar is going to weaken on interest rate drop rumors, and this thing's going to collapse quite quickly. That's what trading's all about. You need to make a decision. Are you a bull or a bear? I don't know at the moment. So if in doubt, stay out. Aussie, New Zealand started to pull down. Again, always the way. I got out here. Was it here? And then it broke. And then it pulled back. And then it's collapsed. So I think my break even was in this propulsion gap, which is really annoying. But I just couldn't hold it any longer. So propulsion gap filled. You've got a propulsion gap to the upside. We're on our way down now. So this is the move. This is the original New Zealand interest rate freeze that for some reason the market decided to sell the crap out of the New Zealand for a month. And then we went into accumulation. We had the Aussie rate. For some reason they decided to drive it. And then we had the New Zealand rate not change again, same as that. And this time they decided to go the other way. So in theory, we should be coming down. That's where my target was, to come and hit these lows. This propulsion move there. They couldn't break through that level and they kept buying this level up. So that is basically where I suspect we will head, to that propulsion gap. So shorts down to there, but pull back somewhere into this accumulation potentially on the way down. So there's your high, your low, your lower high, your lower low. You're looking for a lower high in there before we come down and test. So there is an RSI extension to the downside on this, but if you got in yeah, that wouldn't you? But yeah, I mean, it can be taken long, obviously. You've had a reversal alert on 5 minute this morning, but I'd much rather be short on it, I think. There's your reversal alert this morning. You would have also had one in there. So that would have been a reversal alert this morning. And then we pulled down and we just invalidated that low, which gave a new alert. And it's off. So, but I'd rather take a short out of here somewhere. There's no propulsion gaps, unfortunately, to target. So just look at a pullback on that and try and get in on a reversal as a short. But again, we have hit support. So very, very difficult at the moment with this, because it is so, there is absolutely no reason to be bullish or bearish on this. In theory, you should be able to take this in either direction. But the Aussie New Zealand goes into these huge runs for no reason whatsoever. And it suddenly powers up and then it completely depowers. It's done it a lot. Yeah, it's what it does. Huge run, undo it. Huge run, undo it. Yeah, huge run, undo it. Huge run, undo it. And it does these mental moves and then it undoes it all. Yeah, but it doesn't go anywhere. Look, this is going back to February last year, over a year ago. We haven't gone anywhere. We're just hugely volatile up and down, because there is absolutely no reason for these two to be stronger or weaker than anybody. Yeah, it hasn't been for the last year. It's just hugely, hugely volatile. So, yeah, at the moment, probably more of a short bias on it. And again, this is why trend trading doesn't work 90% of the time, 80% of the time, because if you scroll out, it looks like it's a long. We've got, you know, it's above the 24, above the 72. Looks like a long, but it's not a long. It's just a range. Yeah, we're coming out the range high propulsion gap. So I would be coming down here. So short onlys on it, really. Aussie US, very similar. So I've got shorts on this at the minute from yesterday and the day before. Yeah. Oh, no, sorry. 2 entries from yesterday. So first entry yesterday on the H1M5 mean reversion at the highs. And then obviously the news hit. We pushed up. So got second entry on. Third entry is above ADR today. Had a nice reversal alert. So hopefully we'll just retest and drop and come back down and retest that. So same as the Aussie dollar CAD we just looked at. It's an accumulation break. It's either going to hold and continue or it's going to be a failed breakout. So target on this, obvious target would be here. It's not going to be an awful lot of profit, but I'll take that if I can get out of it quick. It's just here. So if it's going to be a breakout, range break, we're looking for a break, retest, push. If it's a failed breakout, it's going to come back down into the range, but that pays me money, so I'll take it. CAD Swiss. So the CAD obviously dropped yesterday. As you can see, totally range bound again. All these Swissies are stuck fast. Market really doesn't know what to do with the Swiss because they shocked us. And we've had no more volatility coming from the Middle East conflict, so there's no more safe haven runs going in on the Swiss at the moment. The CAD is very stable. Oil is very stable. Oil is the CAD's main export. There's just nothing to move it. So if we get any safe haven runs or any news events, it will move. Other than that, that's what you do. So there was a short entry there. You would have really struggled to get into that because it was just an A-shaped recovery. There was a long entry there, which you would have got a little bit of movement out of. It's really just stuck in an ADR range. So you can't really do an awful lot with it. There's a 5-day reversal alert there, which shows you how little this thing is moving. So at the moment, that propulsion gap to the upside is holding. We've got a range low here. Could go either way. So if it drops out of this range low, it's going to give an RSI extension and a long signal. But if it does drop out of that range low and it is a range break, this is the safe haven run low, which is last month's low. So I suspect we'll probably run down to last month's low. But that was just literally a 6-hour safe haven run, which they undid. 8 hours or so. It just literally went, oh my God, looks like it's kicking off in the Middle East. No, it's not. Yeah, so realistically, that is your low. Yeah, so it could well just do that. So that would be a nice little long. It's not going far. So, you know, if you look at the actual moves that we're getting, they're not massive. You might get a 2, maybe 3 ADR move, which it will undo. So it's pretty safe to trade in either direction. As you can see on the RSI here, if you're taking 70-30s, you've had a couple of opportunities to get in. If you're using 80-20 or 75s, which I was before, this thing hasn't been tradable for months. So there's just no entries. So stuck sideways. I've covered the yens. So euros. I've got a long on the euro at the moment. That's annoying. That went in this morning. If I'd have looked at that an hour ago and I wasn't in the spin room, I would have taken that. It's a range. I'm just going to put a break-even stop on that one. Because if this propulsion gap fails from the Australian dollar, so if the Australian dollar doesn't weaken further today, I'd rather be bearish euro. We had further talk yesterday from the ECB about rate drop in June, and we're not far away from that now. And the market doesn't seem to be particularly heavily pricing in that rate drop yet. So I get the feeling at some point this euro might suddenly accelerate for a week. The market usually prices in interest rate drops somewhere between 2 to 6 weeks before the interest rate drop. So the market makes sure that it's got all of its positioning in way before that news comes in, which is why when you get an interest rate decision come out not as expected, you get those massive 300 ADR spikes, because the market's priced in that they are going to do what they said they were going to do. If they don't do what they say they're going to do, they have to unwind that position, and they do it fast because they got a shed load of profit on it. So the market has not dumped the euro yet. And that rate decision is June the week after, isn't it? June the 7th? Yeah, June the 6th. So we've got 2 weeks, basically, roughly, before we get that decision. So I get the feeling the market is going to start pricing that in, because it hasn't done it. It doesn't seem to have done it much at all at the moment. And obviously with the US dollar dropping yesterday, US dollar went through the roof. So I don't really want to get into a heavy position long. So it's the sort of thing, if we get, I mean, to be honest, if I double topped that today, I'd take that $300. Because I don't think we are going to be massively bullish on this moving forward. So euros, all of them, it is, has pushed down a bit, but, look at what we've done for the last week and a bit, not a lot. So if it breaks that range low, I think we'll be off. So just be a little careful with longs. If you're using the EAs or any EAs, it's probably worth sticking them in short only mode now. Take the highs, no problem, but the longs, little bit more risky. If that euro rate comes down, we're only expecting 0.25%, and I don't think they would go 0.5%. If they went 0.5%, you would be really in trouble if you were long in it. But if they go 0.25%, at the moment, the guidance seems to be that we're going to drop in June, miss a month. Yeah, so we won't do one in July, and then we'll drop again in August. If the CPI numbers come out in June dramatically lower than forecast, they will probably bring that forward, and that will drop it very, very quick. So yes, we're dropping interest rates, and we're expecting CPI to be stable, possibly a small bounce. If CPI actually drops in June, they will be forced to bring that interest rate drop forward. So there's nothing I can see on this apart from, yes, we're definitely dropping the rates in June, and yes, we're definitely dropping the rates in August, but there's potential for it to drop earlier. Therefore, the only thing I can see with this is it's either bearish or really, really bearish. So a bit dangerous to be long in it. But if it comes down in normal market structure, it's not a problem. Yeah. So I took a long there. Not a problem. Yeah. You're going to get nice pullbacks. That's what trends are. What do I think about the NAS? First of all, it's shut. Secondly, it's not Forex. So, don't know. Stock indices are intraday products for me, and it doesn't open until 2:30 this afternoon. So there's no point in looking at it now because it's just the Globex session and doing nothing. So yeah, I'll be out of that on a double top today, or I'll be out of it at break even. EuroCAD, got short on EuroCAD. Nice big target down at 150 ADR in that propulsion gap. So again, the CAD obviously rallied with the US dollar yesterday. Again, this is what I mean by the market doesn't seem to have priced any weakness in the euro yet. So they need to get on with it, assuming they are. But again, this is the first forecast interest rate drop for 12 months on anything apart from the Swiss, which obviously wasn't meant to do it and just did. So again, we've never sat through this rally, freeze, drop scenario before. So is it going to be the same as normal? Are they going to factor in the drops, or is it not the same now? This market is in a completely different regime to what we've ever seen before. So we're assuming that it's going to do what it always does. Price is going to drop on interest rates, and they'll factor interest rate drops in before they happen. We're 2 and a bit weeks away, and it's doing that. So, you know, this is not, again, not normal. Let's keep using that unprecedented word, don't I? But it is. The market is just not acting as normal at the moment. So I'd much rather be short than long. And if you want to, these are the times you hold, because if you want to get some seriously decent money out of some of these moves, I mean, it's almost like you can add on propulsion gaps when this move starts. So there's absolutely no reason why within the next month we shouldn't be trading back down at these levels. So yeah, potentially good little drops coming. Euro Swiss, same sort of thing. We're very, 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 very sideways. So again, no reason why we won't be back down there. That's actually the low. That's the not the intervention, the safe haven run. So this is your low. That's the low of the range. Absolutely no reason why we shouldn't be down there either, unless obviously something happens with the Swiss. If there's some escalation in conflict, obviously you'll be down here very, very fast, like that. Yeah, so that's a safe haven run. So obviously extrapolate that over there, and if there's something kicks off in the Middle East or a rocket accidentally hits a US column or something, you know, it's just collapse. But shorts on this as well. Euro pound, again, shorts. I got out the euro pound yesterday. Down there. That was just before the news. Again, very, very range bound, very, very sideways. Tiny ADR on this. You can see very clearly the propulsion move from the highs held very nicely. We've only got propulsion gaps to the upside, so looking to target range lows. But obviously this is going to move. This is also going to drop interest rates, but we don't know when. Bailey's being very, very, very cards close to the chest at the moment, and we're not sure about data. So we're looking August. So we will start to get bearish on the pound as well. And if we get bearish on the euro and bearish on the pound, that just gives us a range. So nothing changes on this. I don't see any reason why you couldn't trade this one in both directions. However, you've got to bear in mind that the euro is probably going to go 2 months before the pound, so you could get stuck in a couple of months of squeeze. Here in New Zealand, shorts, and that is obviously started already. So I wouldn't be looking for really shorts on longs on that. You have had a reversal there for a long, but watch these highs and that propulsion. So if you are long in this up into there from that, that's where your target would be, but I'll be looking for shorts on that one as well. It's a breakout short. So again, we talk about price discovery. This is either going to be a price discovery that fails, or in this case, more likely next leg down. So you'll be looking to retest that and you can get in short again. And Euro US. So this is the one, obviously, we're just up at the monthly highs now. I've got positions on this one. Short. So we got these highs above. This is the propulsion move that caused that new market structure leg down. I'm going to pull back. Made a new high and then collapsed on the news. So we've completely filled that propulsion gap. And this is the one, you know, that you would expect to be dropping now, ready for that euro rate. However, they just keep selling the US dollar. So this is rallying at the moment, but I have no problem being short euro US at all. That interest rate on the US is looking further and further and further back. It's looking more and more likely now that we will not get a drop on the US this year. So that CPI data that we had yesterday, yes, it's ever so slightly down, but they're looking for drops. Yeah, this isn't dropping, it's stuck. Yeah, so it's not only bounced, it's now stuck. Yeah, I mean, 0.1 is nothing. It's just nothing. It's going in the right direction, yes, but it's not fast enough. Yeah, they want to be below 3 before they even start thinking about talking about possibly in a couple of months, maybe if it continues to do. It's not even down there yet. So We've got another couple of CPI numbers really before they'll give us any indication, I think. So there is no reason to be massively bullish or massively bearish on the US dollar at the moment, but there is a reason to be bearish on the euro. So any positive news we get, we should get a drop start. So it's just forming a new big range potentially at the moment, I think. But if it doesn't work out, so I've got three positions on this, averages within ADR. So if it can't get me out today, I'm just going to move my targets up on this actually while I'm here. So just above that propulsion move on the news. That's where we bought from. We retested A-shaped recovery, and then we took off. So I'd be looking for a retest of that level if it's going to continue up. So yeah, so that one obviously at some point bearish, but if it doesn't work out and we don't, if we just do a flag break or it just accumulates up here and then rallies, you've got three nice resistance levels coming up, and obviously a previous month's high from 2 months ago. So you got resistance coming up once they filled this propulsion move, but that wasn't really a propulsion move. It was an A-shaped recovery. So you can kind of forget all of this because it was just undoing the previous news move, which is very much what I can see this doing as well. So, but nice resistance is coming up. You're definitely going to have monthly limit orders there, and you're going to have weekly limit orders there. Have you ever back tested with VWAP? Yeah, I used to use VWAP all the time, but you can't use it in Forex. Think about it. It's volume weighted average price. There is no volume. Yeah, you're looking at your broker's data. You're not looking at centralized volume. You can't use VWAP. VWAP is for futures. If you can only use VWAP, volume profile, that type of thing, if you've got a centralized volume, because the volume shown on my chart here won't be the same as the volume shown on your chart unless you're with Robo Forex. If you're with IC Markets, FXCM or whatever, you're seeing the volume that they are providing you, which is not centralized. So VWAP will be a different quote on every broker. So you can't use it. You did a back test on here using VWAP and came up with a strategy, and then you went and traded on another broker, your strategy wouldn't work. No use at all. Right. And also you don't see the vast majority of the volume goes through the FX market because it's OTC transactions through banks. Yeah. So the banks have over-the-counter transactions. The majority of their deals are done intrabank. So Barclays will phone HSBC and go, I've got 500 million long euro US. What can you do for me? And they'll go, I'll take the whole lot. You never see this on the chart. Yeah, all that volume going on, you don't even see it. You don't even see a candlestick move. Yeah, you're seeing mainly the speculative orders here, and obviously the current exchange rate. So it's expensive for banks and institutions to put volume through here with market makers. They don't need to do it, but they will. They have to with some of it. So yeah, volume's no use. You can try it. I mean, there's a lot of people that there's indicators out there for VWAP, for Forex, for MT4. I mean, you can't do stocks on MT4. It's all CFDs, isn't it? Contract for difference. It's a price quoted by your broker. It's not real. None of this is real. This is all just provided by your broker, and your broker can move that candle up there if it wants to. You can't argue with them because you've signed a contract that says you move the price where you want to and you fill me at whatever price you want to. Go and read your contract with your broker. You read it in detail, it'll scare the crap out of you. You've signed a contract with them to say, fill me at whatever price you fancy. Yeah. In your contract, it will say somewhere, we will aim to fill your order at the price you have requested where possible. However, if we cannot do that, we will fill it at the best price that we can find available to us. Yeah. So if you have a stop loss here and price moves to here, they can spread it, fill your contract, pull price down and go, yeah, I know you asked for it up there, but we couldn't get that price. It actually, we got a quote for it there, so we filled it there for you. And you turn around and go, but that price never got there. I said, yeah, but you signed a contract. Read it. They are not your friend. When, for example, Barclays sell 100 million of euro, how does that show up on our charts? As a candlestick. So if it's just going through the dart pools and through market makers, it would just show up as a candlestick. And then it's the same as it's an auction, basically. What you're watching here is an auction. Yeah. So if a bank or an institution has a large order to place, and there's another bank or institution that has a large order to place, and those match up, they'll do the deal. Yeah. If they've got a very large order to place and there isn't someone available, or they don't want to use someone to transact, they will stick it through the market maker desk, and the market maker desk will go out and find liquidity for that order to get filled at whatever price they deem fit. So banks and institutions will be given orders by commercial clients like Microsoft, Tesla, and everybody, and say, right, I need to do a transaction from here to here, these currencies. Can you just execute this 500 million? And they'll go, right, I can get 200 million of it done with HSBC. So we need to stick 300 million through the market. Let's put that out there and see who can do it. Okay, we'll chop the 300 million up into 25 million chunks and dump that 25 million and see how far it goes. Okay, we've got the whole lot filled at that price. Brilliant. Dump another 25. Whoops. Oh, okay. Right, well, we'll hang on for the rest of it until price comes back down, and then we'll buy it again. Boom, boom, boom. So you see wicks. Yeah, just large orders being placed by banks. All you're seeing on your chart is a large order followed by a large order, followed by a smaller order, and then followed by a smaller order. Yeah, if you see a candlestick that looks like that, there was a large order placed by a bank and all taken up, and then another bank placed a large order and they filled the whole lot. So both of those banks completed their orders. Happy days. We didn't move price because we put 100 million in that way, 100 million in that way, and that's what we did. Yeah. But 500 million in that way, 500 million in that way, we filled our orders. They went to the pub because they've done their job for the day. There's no more orders on the desk. Brilliant. Every morning, banks get in, they sit down at the desk. Obviously, they don't have a load of paper anymore because you don't use paper, but you would have had a load of orders on your desk, yeah, on order book, yeah, and you would say, right, I've got to do 300 million long euro against the US for them. I've got to short the Swiss against the yen for them. Right, how much liquidity have we got available to do that today? And that's how it works. It's just a business, yeah. You go on holiday, you phone up your bank and say, can you convert £150 into euros for me, please? That is in here. You never see it because it's not even it's a tick. Not even a tick. You won't see it, but that's all you're seeing. That's how it works. It's the same as any market on the planet. I have this and I want to get rid of it. I want to buy it or sell it. Yeah. I'm happy to pay this price. I'm happy to pay this price. Spread. To get that transaction done, either this guy has to go, all right, I'll give you your price, or this guy has to go, all right, I'll come down and give you your price. That's a tick. Yeah. The volume of money is either going to be conducted equally during a period of time, or it will move up because there's more people wanting to buy, and therefore the sellers move their price up because of supply and demand, or it moves the other way because there's not enough people wanting to buy. So the sellers, to get their orders filled, have to move down. Supply and demand. That's all it is. And you see the outcome of it, which is why I keep saying that candle there has got absolutely bugger all to do with the next candle, because that's the transaction that happened in that hour. You've no idea what banks and institutions have got on their desks for the next hour. So how can you predict where the price is going to go? You can't. Doesn't matter what that candlestick did, the outcome of the next candlestick is 50-50, because if there's more orders in that way than there is that way, after that candle's gone in, the market will move down, or the price will move down. The candlestick will move down. It's totally random, the whole thing. Yeah, but there are things that happen within banks and institutions that leave footprints in the market. Yeah, that 500 million pound or dollar order that I said about, that they can fill 200 of it and they've got 300 million left to execute, which they'll break down into small 25 million parts, because there's no way they can place an order for 300 million in the market, because what will happen is a candlestick will go like that, because they will say, right, we want to buy 300 million's worth. There'll be 10 million, 10 million, 10 million, 10 million, 10 million, 10 million, all the way up until they filled the order. Price will shoot up. They will not get a good price, will they? But if you put 25 million in here and it goes poing, and then it drops back down, you buy another 25, buy another 25, another 25, as someone's just said, iceberg order. This is what you see in the market. If you use any software in the futures market, like I'm looking on my screen, I can't remember what it's called because I haven't used it for ages. But there's visual order flow software you can use, Jigsaw. You will see the iceberg orders. You'll see them execute. And that's all this is. Yeah. So this is what I said, this move, when you get a large move in one direction, it means that the banks have been buying a large volume and they are leveraged long, i.e. in profit long. So to make money, they have to sell a portion of that move. Market structure. If you are long and it moves up and it comes down and you buy more and it moves up, you do not get out of your order. You wait for it to come down and you buy more of it. As long as you've got enough orders to execute. And this is the thing, orders run out. Markets cannot go parabolic for a long time because there's literally not enough money in the bank to continually buy something. And there's not enough people up there to sell it. So you get to a point where it stalls. And this is measured by relative strength movement. It's all that's happening. It's all you see on your chart. But it's got nothing to do with volume on a CFD. In futures, it has got a lot to do with volume, which is why everyone uses volume profile. It's really effective. But not in this. They spread their orders out. Yeah. I mean, how does the broker get that information? There must be a volume associated with it. So there's you can look all this up, Thought Feeder. You can find all this information out on the web, but there's what they call dark pools. Yeah. So your broker will get quoted a price by a pool. As a broker, there is a feed. You have liquidity providers, banks, basically. So if Lee as a broker, yeah, I can execute orders with Barclays, HSBC, Chase Manhattan, and Joe Blogg's bank, right? They will all quote me a price, an exchange rate. As a broker, I then get that exchange rate and I will build a book, spread that rate lower and his rate. So he'll be giving me a price for a buy and a sell. He'll be giving me a price for a buy and a sell. He'll give me a price for a buy and a sell. He'll give me a price for a buy and a sell. That will give me an average. If I build a spread around the average, basically, as soon as you place an order with me, what I will do is I will place the order, I will get it at that price, and I will see who has the best price to execute the order above or below the book, depending which button you've pressed, and I take that spread, and I'll charge you a commission for it. That's how it works. There are dark pools out there, which are pools of liquidity available as well, but you don't know who is taking the other side of the order. Yeah. So those are also other prices that are available, much more volatile, much tighter spreads usually. So that's basically how it works. They will quote you a price here, but this spread, yeah, that you see doesn't exist in the markets. Barclays will have a price. HSBC will have a price. Chase Manhattan will have a price. If I'm a broker that wants to use all three of those, and I don't care who it is, to make money, I will offer you that and that spread. Which is why some brokers have really good spreads, some brokers have really bad spreads. But if there's an order sitting here, I can spread it up to here, take that order, pass it down to that guy, make money, you get stopped out, I make money, I make commission because you press the button again, and everybody's happy apart from you, the trader. He's happy because he got his order filled. Broker's happy because he just took you out. This thing that you see here is just random, which is why we don't use stop losses, because they are an order you are placing in the market to tell your broker, when price gets close to this level, go and find a price you fancy and just take my money away and make a load of cash off me. That's what it is. This is brokers are the money makers in this industry. Banks and institutions can't fail to make money, because if they want this candlestick to go up to the top of today's range, they can do it because they've got quadrillions of pounds, or euros in this case, where they can just go, let's just take that, dump that on there, and it goes up to there, and brilliant. Okay, right, now we'll short it. They can do that. Brokers can't do that. We can't do that. So we basically have to ride the waves of the banks. Brokers make money in between the banks. The banks make money by moving the market. We sit here and we try and figure out how the hell we can make money using stop losses. Can't. Because it's all rigged. It's not rigged. It's just engineered to be very, very difficult for you as a retail trader to make money, because everything is stacked against you. But if you just get in and wait and then see what happens to price, and then if you know how market movement happens by going up and down and up and down and up and down and up and down, yeah, you know that if it's done too many ups, there's a higher probability of a down, elastic band theory, and you can make money out of it by basically putting your price, as a broker would, in a place that is likely to be overtaken by price at some point. That's it. But if you worry too much about the mechanics, you'll try and focus on, well, you can't focus on that really. I mean, this is why all these people that sell these high frequency trading EAs and everyone that tries to use HFT trading, you can't, because the only way HFT trading is going to work is if you can get your order in before everybody else and you are basically making money out of ticks. You can't get your order in before everybody else, because it doesn't matter what price you ask for, the broker won't give it to you, because they've got to give your price to someone else to make money. So HFTs cannot work. And I don't care what anybody says. You can show me as many back tests as you like. Stick that on a live account. That HFT EA ain't going to make money. It might do, and it might be lucky for a little bit, but the brokers will adjust your account spreads when they see what you're doing to take into account the way that you're making money, and they will just spread you out the market. Yeah, I've shown you the software. I've put a video up in the Discord channel, yeah, about the software providers that supply software, iGold it's called, to brokers, which basically analyzes your trading and says, right, this guy is a scalper. What he seems to be doing is this, this, and this. The best way to extract the money out of him is to widen his spread at these particular times of day, because he seems to trade only the London session, and he seems to be in and out within 10 minutes on a 5-minute chart. Therefore, the best thing to do is, after about 10 to 15 minutes after orders have been placed, increase spread by 0.75%, which will usually take his stop out before the TP is hit. The software works it all out and auto-adjusts it for you. So why'd you get variable spreads? Because your broker knows exactly how to get the money out of your account, because you're telling him exactly where you're going to get out of the account with a stop loss. Yeah, there's software that does all of this. I've shown you it. Not your friend. Enemy, big enemy. So the only thing you can do is get in, see where the price goes, and then assume that the market is going to take profit on that move. If it doesn't take profit on that move, wait for it to push again, and then assume the market is going to take profit on the bigger move that it's made. And if it continues to do that, you need to wait for the next profit take. When it will come, you have no idea. But it's just Fibonacci. It will remove 30, 50, or 60% of that move, depending on how much of that move was commercial or speculative. Speculative orders get 100% undone. If you have a 100% speculative move, you will get a 100% speculative retracement, A-shaped recovery. Yeah. If you have a 50% commercial move, 50% speculative move, the commercial move will be a long-term transaction or a hedge, which will stay in the market, and they will remove the speculative part of the order to make money. And then what they will do is add the next part of the commercial order. And that might only have a third of it being speculative, which is why market structure and Fibonacci is impossible to predict, because you've no idea how much of that move is speculative and how much of it is commercial. In this case, it was that much. They left that bit on. Propulsion gap. At some point, they'll be asked to undo that move, and it will return to the propulsion gap and fill it. Just what it does. And as I say in the bootcamp, the only thing we cannot do is time this market. You cannot time when the moves will happen. You know they will. You know that they fill the propulsion gaps. They do it all the time. This is why this indicator is here. I'm not making it up. Proves it. Yeah. It's coming up here. I know it is. Then it's going down there. I know it is. When? I haven't got a clue. Because it depends on the volume of orders every day as to which way this thing goes. But eventually they won't have any more orders that way and they will go the other way. But you can't time that. So how can you build a strategy that uses a stop loss to time the market that is untimable? You can't. Why do strategies using stop losses always fail? Because they're random. You're basically trying to force a mechanical structure onto a random moving object. Yeah. Imagine something that is in front of you that every second changes from a square to a circle to an oval to a triangle. Your job is to pick something to put on top of that. How many of times are you going to get it right? Once, roughly 25% of the time. Sound about familiar for a strike rate? 25 to 30% with most strategies? Because it's random. Can't do it. You can do it with some strategies work, but they are all of them are based on bank theory, bank movement, what the order ebb and flow is. And the order ebb and flow is always there. It's in one of three states. It's either in an accumulation state, it's in a breakout state, which is either going to fail or pass. And if it passes, it turns into a trend state. Yeah. So strategies are formulated to take advantage of market conditions. Market conditions change, which is why your range-bound strategies don't work in breakouts and trends. Your trend strategies don't work in ranges. How can you predict when this is going to happen? When are the banks going to find equilibrium because they're all happy and they don't need to move the market to a different price area? I don't know. Ask the banks. How can you ask the banks? There's 10 of them and they all have a different opinion. They all have a different order book. So if you've got 10 people fighting with each other, you've got to pick a winner. What are your odds? You know, this is what you're up against. Which is why we just get in and wait, because you can't, you've got too many people against you to make it easy. This is why I say this is akin to brain surgery, this job. Too hard. Probably really easy when you do it a lot. All this time I believed they get calls from the man with no face. It's really a business. Yeah, it is. So the brokers are scalping our orders. Yeah. I've shown in here many times where I've got aggressive drawdown. So when I take aggressive drawdown control positions, I put a stop loss on. Yeah. Right. I've shown many times, right? I've come in the morning, right? And my stop loss on that order is there. So there's a line drawn like that. Yeah. And my stop loss is triggered. The candlesticks did that. Right? My order got triggered there. Price traded there. Right? Look at the spread on this. It's that big. That's the spread right now. That was the spread there. But they spread me up for a tick. Literally a tick. No one else saw it. They spread me up, took the order and pushed it back down. If I phone them up, they go, yeah, sorry, there's a liquidity spike there. Unfortunately, your order got triggered. Prove it. I can't prove it, can I? Because I don't know where they farmed my order out to. Yeah. And I signed a contract with them to tell them that they could farm it out wherever they like, whatever price they can achieve for me at any point of time in day that I asked them to. And I've asked them to by placing an order in the market. So they've done what the contract says, filled my order. Yes, price never got there, but they did what I told them to do, fill the order. And in the process, they took a lovely profit, lovely spread, lovely commission. And as I'd held it for 3 days, they took a swap off me as well. What's the best job in this world? Broker. Absolutely. Best way to make money. That's what they do. You know they do. You've seen it. You've had it. Everything I'm saying, you've seen it. You've had this happen to you. Will they be able to manipulate your spreads on future broker platform? Not on the futures, no. So all futures transactions go through the Chicago Mercantile Exchange. Every single contract goes through the CME. You cannot have over-the-counter futures transactions. They all go through CME, centralized brokerage in Chicago. Yeah. So what you see on your chart, every trader on the planet is seeing. Yeah. The CME data feed is what I see, what you see, what every bank on the world sees. That is fixed. That spread never changes. It is 1 or 2 ticks maximum. You'll never see a 3-tick spread on the CME. And if you do, it's because there's something very wrong. It just doesn't happen. Yeah. So that is the difference between buyers and sellers. And that is why the market moves. Like I said, you got 100.01 and you've got 100.02 and you've got 100.03. The sellers will be sitting here offering 100.03 and the buyers will be down here asking for 101. Yeah. So you will see a load of orders sitting here and a load of orders sitting here, and there's no orders sitting in the middle. If the market transaction is going to happen, either they have to go up to there or they have to come down to there. Tick. Yeah. That moving from there to there is either the seller's going, screw it. All right, we'll just fill it down here. Or the buyer's going, screw it. We'll just fill it up here. 90% of these transactions are HFT transactions, high frequency trading, done by banking algorithms. There's no human beings involved, which is why I say you cannot beat this market with an HFT, because to get these orders executed, they have to go through banks and clearing houses. Yeah. So if I place an order now, where am I? Right at the back of the queue behind all the banks and institutions who are executing at this price. I'm never going to get that price. I can't have it because by the time I get here, it's different. Which is why you see an order book in futures. Yeah. It's just what it is. You don't have to worry about any of this stuff. It doesn't matter, but you need to understand how it works from a point of view of, I ain't got hope of making this work if I worry about it. Yeah, you can't worry about any of this. And the easiest thing to do to stop yourself getting ripped off by the market is to remove the stop loss, because that is the bit your broker can see with CFDs. If it ain't there, he can't execute it. So if price trades up to here now, yeah, he may well spread it out, because other people, I'm 99.9999% sure, have got a stop loss there, because that's what the market tells you to do. Every training course tells you to put a stop above the high. So where does your broker spread when he gets near a high? Every time it gets anywhere near a level, yeah, you probably won't even see it, but it will spread. And if you've got an order there, you'll see it. If you haven't got an order there, you won't, because it's tick. But this is why you have a bid and an ask. Yeah, the bid's there, the ask's there, the ask moves up to there, but the bid doesn't move. So that's where the candlestick prints. Can't win. You can win, obviously, but not doing that. How is the software called? It's iGold. Can't remember what it's called. Goldeye. Sorry, not iGold. Goldeye. Liquidity management. MetaTrader tools. Business intelligence. That'll be the bit you want. Goldeye. Visual Edge. That's what it's called. I mean, So this basically, this software farms out your order to the best available. Okay, look, that's the only bit you need to be worried about. This software maximizes the broker's profits. Make confident risk and trading decisions. Optimize the A book and the B book flows. Yeah, you know what A book and B books are? A book and B book is basically where your broker splits its customer base into two portions. Profitable traders, non-profitable traders. A book, it depends which way they do it. That's why it's A and B. You never know really which. You can call what you want, but a group of profitable and a group of unprofitable. If you're an unprofitable trader, you put 1,000 in, you lose it. 60% of traders lose 60% of their revenue in 60 days, or 90% of traders lose 90% of their revenue in 90 days. Either way, whatever you put into your brokerage account, 90% of that money will go somewhere else. So what the brokers do with A book or B book customers, depending who the losing party is they take the opposite side of your trade. It never even goes out to a dark pool or a broker or a bank. Yeah. So basically, you go long, he goes short. Why? Because 90% of you lose 90% of your money in 90 days. Well, if that's going to happen, we might as well stick it in our bank account. B book customers used to be A book customers, but what happened was their P&L over 3 months went like that. And it's like, we've just lost 3 grand on that guy. Okay, switch him over, farm his orders out to the dark pool. Nice profits. This software manages this whole thing for the brokers. It also has it won't show in this video. I've seen it in another video, which was a conference. Probably won't show it in here. But they have it's kind of like a spreadsheet view of all customers. And basically, it shows all customer orders. It shows price, and it shows all customer orders. And next to each price point is a dollar sum. Yeah. Meaning that when you are here, if you spread the market that far, you will grab £600 worth of orders. If you grab the market that far, you'll grab 800 worth. If you spread the market that far, you'll grab 1,000. And there's a button next to each of these. If you press it, it spreads the price on the terminal. Yeah. Can you imagine having a piece of software that you could basically pick the amount of money you want to make? This is broker software. So if you're scalping on the 5-minute time frame right now, or 15-minute time frame using a stop loss, bear that in mind. Hourly, 4-hourly charts and above. Anything below it, you're dead. Even if you're not dead for a couple of weeks, not dead for a month, you will be dead within 90 days. Just the way it is. There are traders making money using stops. Yeah. The traders making money using stops are trading hourly charts and above, and they are using stops, half an ADR, and more. Yeah. So your stop is not above the high. Yeah. You can never tell, right? But if I was a broker giving away free education, what I would tell everybody to do is when the market moves in one direction, go in that direction and place an order to get out if it goes above where it came from. Yeah, think about it. Right? Short, dead. Short, dead. Short, dead. Long, in profit, break even, break even. Long, in profit, break even, break even. Long. So if I go long, I get no money because I break even all the time. Because when it gets into profit, they tell me to move to break even. And it comes down and moves to break even and goes in my direction. I don't make money. If I go the other way, I keep getting stopped out. How many times have you heard people say, I've no idea why, but every time I get in the market, for some reason, it goes the opposite direction? It's all what it bloody does. It goes up and down all day. Why are you shocked by this? It's all what it does. It goes up and down. Yeah. But what you do is you place an order in the market to tell the broker to execute it if it goes up and down. So you're saying this goes up and down. I've observed that. What I'll do is I'll place a load of orders so that if it carries on doing what it does, they can take my money away. Sounds ridiculous, doesn't it? But every trading course on the planet teaches you to do that, right? And now you know how the brokers work. You can see where all these trading courses probably come from. And why are all these people that offer trading courses affiliated with brokers? Penny dropping yet? Took me a long time to work it out, but that is it. No news trading would be speculation, and why we usually get a 50% retracement. Yeah, so you'll often on news, which is why I said yesterday, remember I said yesterday, if you were here yesterday, when we got the news, I said I wouldn't be surprised if within the next hour we're back to where we started. I said, that's a really good looking short up there. Wait for it to break the low and then trade it back down to origin. And then it may well take off, or it will just accumulate around here. What did it do yesterday? Exactly what I said. But that's only because I've seen it do it 1,000 times. And all I know is this is an order going into the market. Yeah. But it's the news event didn't back up the order. That's the bit you kind of get after a bit of experience. If it's a 0.1% deviation on a news event and the market spikes in ADR, there's absolutely no reason for that, because it's not a shock. We knew it was going to be roughly what it was. It's not a shock. So the market moves up, large order placed. Why? Because everybody's trading the news. There's a load of liquidity in the market. They're all looking to make money. The HFTs are loaded. Like they put 1,000 rounds of ammunition instead of 10 rounds of ammunition in around the news, because remember that tick chart? That thing will have gone on its way like that. And your HFTs would have gone 100, 100, 100, 100, and your bank balance just goes bigger and bigger and bigger in the banks. And they go, okay, brilliant, right, take it all off. That's what they do. If the news is different, they'll go, right, add some. Yeah. Which is why I believe we will be back down here later today, because there's no need for that. That is not a 0.1 percentile deviation on CPI isn't enough to move the market 175 ADR. Just no reason for it. So what I think you'll find is we will have an A-shaped recovery on our hands. Then, whatever, doesn't matter. But the banks are taking profit on everybody that they've liquidated. That's what they do. But they haven't liquidated them on purpose. It's just that they've placed orders in the market and there's enough people wanting to take the opposite side of the order to build their book in the other direction. All they're doing, literally, banks and institutions, and this is explained on day one of the bootcamp, is you have 3 sessions in the market: Asia, London, and New York. Asia, usually their job is to build a book because liquidity is light in Singapore, and there isn't a huge amount of volume. This is why you tend to see accumulation building in Asia. They then pass that book to London. So HSBC have offices in Singapore, London, New York. They pass the book to London and say, okay, we've got a bias long today of roughly X. So London drive the market up so that that book becomes profitable. Yeah. They then pass over to New York when the New York session starts and says, okay, we've got a profit on the books. If you take partials off of that, we've got more orders to come in Asia, which will drive the market back up again. So they take a partial profit, stick that in the bank, pay the shareholders, place the next order, back to square one. That's the job. It's literally as monotonous as that. There's a load of orders come in. We need to execute all these orders. How are we going to do it? Well, we've got to find some liquidity. So market maker, see if you can find 500 million of this for us. And they'll go, and they put it out. Some of it gets filled over the counter. The rest of it gets farmed out into dark pools and into what you see happening on your charts. That's it. very complicated, obviously, but it's in essence, that's it. Which is why yesterday's bull candle has got nothing to do with today's price movement, because that was yesterday's price movement. Today's price movement is whatever it is. Yeah. Lovely big bull day, bear day, bull day. Didn't go anywhere, but we did undo 61.8% of that, which tells me a third of that day's trading was commercial orders and 68% of that was speculative orders, because that's what they took off and they added more on. That's it. You don't know every day how much of that is going to be that, or whether any of it is, which is why you get multi-ADR runs, 3-day pushes, which is one of the famous strategies by one of the Larrys. It was the three down day, yeah, for the S&P. If you've had 3 down days, yeah, they've probably just taken profit on the previous move. So start buying it, because they're probably going to run out of liquidity and go the other way. Just patterns, aren't they? Patterns. But the patterns are unpredictable and random, which is why you'll never get the same result from any backtest, because the backtest is based on a random pattern that isn't going to repeat. But if you can take that random pattern that you found an edge in and make a percentage above it and a percentage below it also make money, it means that you've got something that makes money on random movement. And it doesn't matter how big the random movement is. System parameter permutation test, robustness. That's what robustness testing is, because you're never going to get the same thing happen again. There's too many variables. There's too many moving parts in everything that we do to be able to find anything that is consistent with one set of rules, which is why I always say with my products, my EAs, there is no best, there is different. Someone said to me this morning, we're using the H1, we're using the 14 RSI. If you want, use a 21 if you want, or use a 16. Sometimes it will be, sometimes it won't be. I don't know. It depends how much the market's pushing. This is a 21 RSI on the hourly. This is a 14 RSI on the 4 hour. But if you use a 21, that line will be in a different place. Whether it's there, or there, the 21 or the 14 will signal somewhere around there after this has happened, meaning that that is likely to happen. I don't know which is the best one to use, because it depends when they do that, which we have no control over. Therefore, we just wait and we see if it works. So news would be speculation as to why we usually get 50%. Yeah. The way you explain the market makes it a lot easier to understand. Does it? I don't know about that. The thing that I explain is it's impossible to predict. That's the most important thing you need to take on board. Yeah. Support resistance. Yeah. That is a resistance bounce. This move yesterday was likely reaching for the limit orders at that level. Yeah. Which is why it's a 0.1% differential, yet we managed to move all the way up here. Why did we move here? Because there's liquidity sitting there. Banks and institutions require liquidity to execute orders. We know there's a bucket load of short orders there. Why? Because there was. And there probably is again. Anybody that shorted that level did it for a reason. If the fundamentals haven't changed from there to there, there's a high probability they will short it again. Yeah. Especially now the euro rate is potentially going to drop. So the market knows there is a iceberg bucket load of limit orders sitting at that level, an institutional level, because price drove from that level last time, meaning there was a large order execution over a period of a week. This is coming down from here because some of that movement that we're seeing is limit orders triggering at this level. We don't know how many of these people that shorted it are still in the market. If it's 0%, this thing could fly through there easily. If it's 90% of people that shorted here are still short, they will add more shorts because they don't want to go into drawdown. So therefore, we will get a strong reaction, which is why when you get to support and resistance levels, it never hits it to the pip. Yeah, because orders are not at one price. They are an area, and there are many of them. Yeah, don't forget, banks can't put a 300 million order there. They'll put 10 million, 10 million, 10 million, 10 million, 10 million, 10, 10, 10, 10, 10, and they'll execute a third of their order within that area, which is why at some point you'll see it go pop, because there won't be enough sell orders to get through that part of their iceberg, and the market will flip the other way. It's elastic band. That's all it is. It's just, I'm in HSBC. Oh, bloody hell, I've got 500 million orders to execute. Well, we can't do it here. Where can we do it? Well, probably there. All right. Well, market maker, get up there. Can we do it? Yeah. Okay. Orders out. Brilliant. That's it. It's a job. They don't enjoy it. If I phone up as Tesla and go, convert 500 million of euro into US dollar for me, and I want it done within 24 hours, the bloke on the desk is going to be going, you want that done in 24 hours? Well, I'll have a go. It's not easy, is it? This is a $7 trillion a day market. Big orders are bloody hard to execute. Not a fun job. Go and ask anybody that's been in banking. And also, if you want to ask somebody that's been in brokerage, go and ask Tom Hugard. He used to be a broker. He knows exactly what's going on, which is why he uses a fixed spread broker, not a variable spread broker, because he knows what the variable spread brokers will be up to. He was one. I saw on Bloomberg the king of quants died. Who's that? That is. Why do I prefer futures trading Forex rather than futures? Because I prefer longer term trading. You can't hold futures overnight unless you've got a very, very, very large pot of cash. You have to be out of the futures market by end of day because the requirements for an overnight hold in futures are astronomical. And you've got to be a scalper. Yeah, I do not want to be tied to a 5-minute or a tick chart for X hours a day. It's bloody hard work. Well, what I've just explained to you, yeah, about how this market moves and order flow works, do you think it's easier to sit here, place an order and come back tomorrow and see if it's profitable? Or do you think it's easier to wait all morning when the bell goes for a market price to get to an iceberg order that I think is an iceberg order, to short it only to find out that that iceberg gets crushed and run over by another bank? Yeah, it's taken me an hour and a half to get just to that point to take a trade which failed. That's really hard. Futures is hard work. It's all about risk, reward, and ratios, and it's not as easy as people think it is. All this software shows you where the orders are, but the orders have still got the same odds as any other order, 50-50. Yeah, you get to an iceberg order, it's the same as a support and resistance level. Yeah, if you get to a market profile that looks like that, yeah, when price drives to there, it's still a 50-50 shot whether or not the volume that sat there earlier is still there. Sometimes it does, and it's very easy. Stop above the high, or rather reverse. So in futures, what you would typically do, which is what most institutions and most good traders do, if an order fails, you don't stop out, you flip and it's called a stop and reverse. You stop that short and you reverse the order in the opposite direction. Because if it breaks through a volume profile, typically it will aim for the next volume profile. So you have to calculate whether or not that volume profile is far enough away, having a stop loss under there to not only pay for the loss you've just made, but also for the reversal to make money. It's a much more complicated mathematical equation to extract money out of futures. This thing, get in, you get in, you get in, you wait. It's just so much easier. But it still costs money in swaps, obviously. I used to trade futures, but I enjoy it. I find it fun, but it is fun. Prop, I used to trade it on prop, and the reason I trade it on prop is because I wouldn't put my own money into it because it's too dangerous. But it also is incredibly profitable. If you have a good day on futures, you can pay off your mortgage. Yeah, look at yesterday on the Nasdaq. Yeah, we made new highs on the stock markets. ADR hits. Yeah, if you'd have got in at the opening bell long and you hadn't touched it, best thing to do is get into a direction, go and walk the dog for an hour and come back. That's the best way to make money in futures. Because every tick down, you're scared because the money is so big in futures. $12.50 a tick. Every tick is $12.50. You can be at $200, $300, $400 profit within minutes. Scary. B plus from C minus. No idea what that was, Franco. It's a British company. What is? Oh, Goldeye, is it? Yes, it is. Yes, yeah. Look, margin caller alerts clients when their orders are closed by a stop loss or take profit, or when a cash deposit or withdrawal is made. Yeah, what that actually is, and that's another bit of the software. They don't show you any screenshots, and I'm pretty sure it's because they don't want you to see, obviously, because anybody can access this website. But they've also got these pages where the overnight swap. Yeah. So let's look at a New Zealand dollar pair just to explain this easily. Euro New Zealand. So if you go back to the beginning of today, yeah, that's not a very good example, is it? Must be a better one. That's better. Right. So Euro New Zealand price closed there, and it opened there and moved down to there. At any point before that candlestick, did you see price moving that wildly? No. At any time after that candlestick, did you see price moving that wildly? No. On their software, they have a margin. You get close to a margin call. So let's say your margin level is 100. It's either typically it's 100% or 50%. So when you've got 50% margin or 100% margin left on your account, you get margin called, and they will either shut all your positions or the most loss positions typically, right? So they got a piece of software that basically at end of day, it looks at everybody's accounts and it's like, right, these guys are on 102% margin. These guys are on 104% margin, and exactly the same as before. If you spread this instrument by half an ADR, you will take all of these down to 100 and you can close their orders because you've signed a contract. They've signed a contract with you to allow that to happen. So at the end of the day, the market will automatically spread to margin call people and close your positions. That only happened to anybody? Had a margin call overnight when the market didn't seem to do anything? Yeah. Happens. And also your stop losses. Yeah, don't forget your stop loss down there. You went long there, you put stop loss down there, right? Price never got there, but they spread you there, guaranteed. But it's their job. Yeah, it's their job. You've told them to do it as well. And that's the thing that people don't understand, because nobody ever reads a contract, do they? Now everyone's going to be getting their contract they signed with their broker and going through it with a fine tooth comb. You can't do anything about it. You can't change it, but read it. Quite scary what you've asked, what you've given them. You've basically deposited X thousand with them and you've said, do what the hell you like. And they do. It is crazy. Anyway, Bank 900 this morning. Good job, Harold. All these courses are just regurgitated information. If their system is good, why do they need to sell it for 3,000? Exactly, Ryan. Spot on. Jim Simmons is the guy that's died, is it? I'm not familiar with. I'm kind of familiar with him. I know the name, and I think I've seen stuff, but I don't really follow Bloomberg that close. Every now and again, I watch it. I watch the market wrap sometimes if I'm up late enough, which is quite interesting because it's all the institutions being interviewed and they tell you exactly what they're doing, which is exactly what this is. So it's good to know. Anyway, afternoon, Michael. It's morning, but anyway, obviously in Australia. Right, analysis. Let's get on with it. I'm waffling today. So the euro, as I've covered, basically ideally shorting, but we'll see how much of this move. It's either going to be a retracement on that or a retracement on that. If it's going to retrace, it may well flag and break, in which case then we'll see how far it gets out of these highs. But yeah, euro should be coming down at some point soon. Pound, can't do anything with the pound odd. It's just stuck. Pound CAD, very similar. Had some decent trades on the pound CAD, RSI to RSI, but nothing for the last week. It's just broken out the highs. Took a short on it yesterday. Again, no real reason for the pound to be strong. This is weakness on the Canadian dollar based off the back of no sound. Yeah, no, there is sound. This is just weakness based off the US dollar move, and I expect that will undo. We haven't got any pound news coming up until we've got Bailey speaking next Tuesday. CPI is Wednesday, so there's no real reason for the pound to go anywhere particularly strong until Wednesday next week. So there is an RSI extension, obviously, yesterday, which I'm short on. Pound Swiss, very similar. All Swiss francs, really stuck at the minute. It's news, nothing. So we just pushed up into propulsion. So potentially this is your peak formation high. This is the add into the short. You can tell when it's a proper move by a bank because the propulsion gap holds. Yeah. So we know that large order is intentionally short. So when they get back to that level, if they want to remain intentionally short and the fundamentals haven't changed, they will add to that position. Yeah. But there may well be banks that don't want to be short there and they will run them over, which is what we don't know. So it's who's got the biggest bank balance when you get here. Yeah. This is what all these lines are orders from institutional traders, whether they be a bank or a hedge fund or any kind of large institution that can move the market. That's what you're seeing. Yeah, so they're battle lines, basically. The short sellers are here. The buyers are spread thinly through here. Yeah, so we get to there. The sellers will run them over and we'll either bounce out of there, we'll bounce out of there, or we'll run down and we'll bounce out of there. We don't know because we've no idea how much volume is sitting there through banks and institutions, which is why you can't be exact with anything. Which is why if you get in and put a plan in place, or if it goes down to there, I'll buy it. And if that doesn't work, I'll buy it again there. And if that doesn't work, I'll buy it again there. By the time it's done that for 3 days, RSI will be extended and it'll be ready to undo the move that they just put in. That's what we're doing, isn't it? We're just scaling into movement. We've got no idea when it's going to change direction. So at the moment, there's a good chance that's going to drop. Pound New Zealand, got longs on that one at the moment. Again, that order's holding at the moment. We've just pushed down into this previous order, which is they're buying up. We've had a reversal alert go in. This is a really old move. This is the New Zealand dollar interest rate freeze, the previous one. So that short has been added to twice, which is why we've got market structure short. Yeah. Now we are finding support at the previous month's low, which is where the buyers are. So the buyers managed to drive price up to here, ran out of steam, sellers took control. So that area and that area are your battle lines. So I'm getting out if we get back to here. Basically move. And obviously if we carry on going into that propulsion gap, we'll be looking to take profit on that leg. Hopefully. Pound US dollar. So shorts on that one. Again, propulsion move. We've got quite a large amount of volume up. The highs up here, large orders. And obviously down there. So we're kind of equilibrium between the two. But hopefully we're just going to pull back on this leg and do an A-shaped recovery on the US dollar move. We'll wait and see. It certainly looks like it's playing out this morning. London's reversing yesterday's move. So A-shaped recovery will be back down to there. So I'm just going to move my TP. So I'm going to need a 125 ADR move to get out down there. But I'll have a look at the portfolio when the market's moved a little bit. New Zealand. Done some drawdown control on this because this move yesterday was very big. So this move on the New Zealand dollar yesterday, we got 100. So it's a 200 ADR move that was yesterday. Really, really fueled by that breakout happening just before the weakness in the Canadian and US. So it rallied up dramatically. So had to take 2 drawdown controls. That was the first entry on the RSI extension. You can't see it's behind my head, which was off the back of that. And again, I was expecting a move down because this was caused by no news. Yeah, the market just seemed to want to hold that. So they just continuously added until we broke yesterday. And as we broke, the US dollar collapsed. So looking for a retest, hopefully, of this area here, which is where my TP is. Exit. But you have also got monthly high coming up and then a previous monthly high coming up there. So that whole area there, which would be roughly probably just one more position if it got up above ADR. Actually, my next short is all the way up there, so I might need to take a manual on that. We'll be looking for a pullback on that leg. Look, again, equal 50% back up into previous support, turns resistance. New Zealand Swiss, just a mess at the moment, this one. Very easy to trade in any direction at the moment, though. There was a short entry on this one yesterday. So you would have got in somewhere around, actually, you would have got in higher than that. Yeah, I mean, you'd have got in somewhere up in here yesterday. So that would have been a nice profit. But look, they're adding back into that leg, look. So this looks like Swiss franc weakness. This is Swiss franc weakening, all the Swiss franc pairs weakening at the same time. New Zealand US, shorts on that one at the moment. Got 3 positions on that one. Same thing, looking for a pullback on the US dollar. We haven't quite got that reversal alert in there holding that level at the moment. US dollar CAD, long on that with 2. Didn't quite get a third on this morning. Not going to go that high. So I'm just going to put my TP at 150 ADR roughly, which is these highs here. So again, we had price discovery move, which failed. Back into the range. Well, that was a safe haven, but safe haven. But so yeah, looking for a push back up into this range basically. So this is a price discovery move to the downside. If it fails, we'll be back up into there. If it works, we're going to need these guys to get run over, in which case we're coming back down into here. So there'll be an entry there, and then I'll be looking to get out on that. Retest to that level there. US dollar Swiss. So again, Swissy, this is the most volatile. I've been doing loads of back testing on the RSI2 strategy recently. And the US dollar Swiss, it doesn't matter what I do with the US dollar Swiss. It's profitable, but it's way less profitable than the rest. This pair, the problem with this pair is you often get safe haven runs that go like that. So you get very big, fast, strong movement. These two move incredibly quick when they move. And if you catch them at the wrong time, where one is moving and one is pushing and one is pulling, you get these huge, huge moves going in. But other than that, they tend to spend most of their time doing this. So this is the most difficult one of all to trade at the moment. But we're coming back into propulsion again. So we got this high, which we broke. So we'd be looking for a retest of that level, which is 225 ADR. So there is a long opportunity there now. So this is again support here. Could well bounce up into this range and come back up and retest that propulsion. Or it could collapse down to there, in which case you're looking for the same sort of move. So that US dollar CAD move that I'm looking at, it would be very similar to the US dollar Swiss. But I'm not getting into the Swissy just at the moment, but it's undoing the move. And US dollar yen we've looked at. So seems at the moment, though, the market wants to undo these moves. So we could well see ADRs today on all of these. So unemployment claims this afternoon. So I'll look at the P&L later today before unemployment claims come out. Anything that's in profit ahead of 130, I will take and put in the bank. Because if that does drive the US dollar back down again, because I've got longs on US, then I will add those positions on again. So basically anything that I take off in profit before the news, if it then drops against me, I can add that back on and make money on it again. If it goes my way, it doesn't matter. All I'm doing is I'm losing whatever I've taken in profit, and everything else that is in drawdown is going into profit. So it's a win-win situation. So look at your P&L at just before the news. Yeah. And anything you've got, you know, any big numbers you've got, just stick them in here, take them. And then, you know, worst case scenario, you can add them back on. Best case scenario, everything that's in drawdown goes green. Yeah. Make it a win-win situation. So, because there is a chance that it'll A-shape recovery. With the news today, if you look at what's going on with this US at the moment, obviously it's not the end of the session yet, but it looks like it wants to come back down to the origin of the move at the minute. But if it is just going to be a partial pullback and we're going to sit around, when that news comes out in the US, if it's negative, we're going back up again. If it's positive, we're coming down. Yeah. But if you're sitting here with that on the table in profit, take it. It's money. Yeah. Worst case scenario, it pushes up again. Add it back on. What have you lost? Nothing, because you're in the same situation as you were before, but you've put that in the bank and you can use that. Yeah. If it goes down, that goes into profit and that goes into profit. Happy days. Yeah. So just anything you've got open that's worth banking, stick it in a bank. That's it. That's it. I've covered everything. So we'll obviously watch what happens this afternoon, see what happens to that US move. There's no ADRs today as yet, apart from that Aussie dollar yen, which is partly spread. Actually, it's not spread today. Look, they actually opened pretty close to where they were, but that's just that move again with the Aussie dollar. And again, you know, this Aussie dollar drop, not really big news, was it? So this is kind of a knee-jerk reaction. It was slightly negative from the unemployment perspective, but which is why we haven't got any ADRs apart from that Aussie dollar yen. But market structure is certainly broken short on this now. So very good chance of a continuation on this one, I think. But we'll see. That US dollar move, obviously, if it undoes, so will this yen move that started yesterday. We'll be back up here on the yens. See you in New York? No, not going to New York. It's miles away. Tomorrow, I'll be in New York session. So tomorrow, I'll be on at 2:30. Come on, website. Yeah, so 2:30 tomorrow, 2:15 tomorrow afternoon, and obviously I'm just going to trade the New York session tomorrow because there's absolutely nothing happening news-wise. That's it. We're out of news now. So one of those unemployment claims are out the way this afternoon. We've got Wallace speaking tomorrow afternoon. That's it. So 45 minutes after market open tomorrow. But it'll be dead, I think, tomorrow. Or it won't. But there's absolutely nothing to move the market. So quite often on no news days, we do get a continuous just rally, don't we? Because there's nothing to stop it. And it just needs someone to kickstart the move, basically. So we'll see what happens tomorrow. But I'm not expecting masses of movement. I think this week we've had our fun yesterday. And it's a case of was the fun just a knee-jerk reaction? Which I think it quite possibly was. So we'll see what happens. Anything else you need? I'll be in Telegram and Discord. Back tomorrow afternoon. I'll be working on the RSI2 strategy development this afternoon. And yeah, we'll see where we go. But yes, good month so far, but it's a bit sticky at the minute, isn't it, still? So if you want to short only, the only thing I would say about the euro, if you're using the EAs, short only on the euro potentially. Maybe not this week, but maybe from Monday. I think I'm probably going to do it from Monday. Just go short only euro. My exposure on the euro is fine at the minute. I've got 2 shorts. I have got a long on, but I will probably want to start switching all my EAs to short only mode on the euro because we've got that change coming next month. So. All right, have a good one. I'll be back tomorrow afternoon, 2:15. If you need anything, Telegram or Discord. Other than that, I will see you guys next time. Have a good day.